Welcome to Subramani. I'm going to do one more video on volatility. Have you been hit by volatility? Have you seen gut-wrenching whips of kind of a valuation change in your portfolio? I have seen. I have sold a lot. I'm still holding on to a lot much more because even if I sell 5% or 10% of my portfolio, I'm still holding on to 90%. So I'm still bullish, but I still have taken a lot of money off the table. And I'm sitting and wondering what to buy. It's not that I'm not buying something, but I'm taking more a trading position than an investing position. I did not expect, for example, in the month of January, I was far more bullish than I am now. Now we have seen the 2-3 things which are worrisome. One is the Ukraine war is not getting over. I did not expect the war will last so long. I thought, like maybe Putin also thought maybe we'll just go and knock them off and come, but he did not expect the resilience of the Ukrainian. He did not expect that the West will arm it so much. So it has got arms and ammunition from US, from Germany, literally from NATO. And the resilience of the people, both of this was unexpected. The COVID surge in China is another problem. The logistics is improving. You can see the shipping rates falling, but the commodity prices are not abating at all. Look at the price of even commodities like sugar, right? So whether it is steel, aluminium, zinc, sugar, oil, nothing is coming down. So if the raw material and input costs are high, there is going to be a problem. Now what happens is, when there is a situation where the federal governments, federal banks and the RBI pump in a lot of money, immediately there is a demand upsurge, but the supply chain takes time to build. So there is a wrong price rise, which is so called an inflation, which is transitory, because it's caused because of the shortage and because the logistics are not yet in place, because they did not, the supply side did not cope up as fast. Then you give it 2-3 months, you know, okay, the semiconductor shortage will go away, the commodity prices will stabilize, but now that's not showing any signs of commodity prices stabilizing. So today it is sugar, tomorrow it could be coffee, day after tomorrow it could be cement, could be just anything, any commodity which is in demand and for which enough investment has not gone in, so there is not enough supply coming. So oil, that is the reason. Of course, I am not even saying that the oil prices are sustainable about above $120, because some supply will come, some fresh investment will happen, some solar energy will come, maybe somebody will revive even the nuclear, I don't know, but some of those things will happen. But market volatility is guaranteed during this period because the oil companies don't have enough oil to sell. The semiconductor companies are not making enough chips to go around the world. Tesla itself needs a lot of chips. So all those things will contribute to the volatility. The earnings could drop and the price could go up, which could again confuse you. A gradual fall in the market is more worrisome because it's not a bull market correction. A bull market correction is short and furious, right? Whereas the onset of a bear market is very slow, dull, boring, gradual, but it does happen. So you have to understand that it will happen. Also understand and accept, though a lot of new people want to tell you that we can embrace volatility, but volatility and equity markets go together, and there will be volatility. When there is volatility, there will be loss in your portfolio. Now they have made a lot of products which says, okay, it will have 20% equity and 80% debt, or it could have 80% debt and 20% equity, some combination. The industry will pick up one fund and say, see, this fund, this has done very well, but there will be 42 other funds in similar categories which have not done well. It is up to you to learn how to handle volatility. No fund manager can protect you from the downside of the market. Yeah, they can make an attempt, but it's not going to be a great attempt. So learning how to manage the volatility is the only thing, and the only way, the best way, is to learn to do Vipassana and sit tight over long periods of time when the market goes through tough times. Putin's, I would think, is a tragic mistake in Ukraine that has happened. Then in US, inflation today is higher than Indian inflation. India also has inflation. China has a COVID surge, and so everybody is a little dicey about the market. Are we in a situation like March 2020? Is it a new bear market being born? I really don't know, because This is how bear markets start, right? So it's not a quick 10-20% fall, and then this is a slow grind. So at every slow grind, people think, oh, my NAV, I will get better NAV, so I will invest. All that's fantastic, but the question is, when do you lose hope? After 3 months, after 6 months, after 1 year? I do not know. The FII figure in India is a negative figure for a very long time. Every day you see a negative figure, and the amount of money that they have withdrawn in April is pretty high. Everybody thought the year end will be over and then the money will come in. Money has not come in. In fact, money continues to go out. The corrections have another problem. The drop in the market is not so much of a problem. It is the slide which is the problem, because it goes like this, right? And people are averaging, people are doing SIP, and there are many genius CEOs also who believe that the SIP figure can't go down. One has to see that, because the SIP figures stays intact if the last 12 months return is not too bad. If the last 12 months return is 14, 15% or even 12%, which means it's not negative and it is not below the 1 year bank FD rate, people will continue to put. Sounds very stupid, but this is how the reality is, right? The full-fledged bear market may not materialize, but you have to be prepared for it, right? So defining and dating bull markets or bear markets normally happens in hindsight. You say, oh, on this 22nd of April 2022 was the start of the bear market. You will never get those dates in advance. The market does not come and announce, from today I'm a bear market or from today I'm a bull market. History tells you, then you take those charts and you mark and say, oh, here to here was a bear market, and then people tell you the reasons. Oh, the war lasted too long, the COVID fears was too high, COVID has already shown its ugly face in Delhi, maybe there is a chance of a lockdown. All those reasons are attributed much later. We will not know what happened, but yes, markets are definitely weak. PSU shares could be weak. Presumably the government will support it because the government wants to pull through the LIC IPO. The LIC IPO is already much smaller size than what they thought it will be, or what we were told it will be earlier, right? So first of all, it's not an IPO, it's an OFS. So OFS are almost always highly priced. So was Paytm the last of the big mega issues, or will it be LIC? Because LIC issues are likely to be, I've seen the figures, it's likely to be bigger than the Paytm issue, unless they tinker with the size by 4th of May. As of now, it looks like one of the mega issues. So the question is, will the PSU shares be supported? Will the Sensex be supported? Will the Nifty be supported to make sure that the issue goes through? We don't know. But all this could be, if the market needs support to pull the LIC issue through, or the LIC issue is oversubscribed only once or 1.1 times or something like that, those will not be good signals. Those will again be signals that the market is weak, right? So enough of partying. That's what the market is trying, perhaps saying. Corrections don't stop. That is the problem. As scare increases, the SIP, the index falling is more or less sure, and the fall will be very gradual and slow and pretty long, right? So that is what happens. So whether you take the World War II, you take 1929, you take any of these things, it was the beginning of a big bad market. I am not saying we are anywhere near that, but we may not be near a bull market also, right? So what all do you have to worry about? Do you have to worry about Europe? Do you have to worry about US? Do you have to worry about Japan? I think you have to worry about US, because a lot of Indians were investing in the US and a lot of US money was coming into India. If all that money is going back, or maybe going back slowly, will the Indian retail investor do an SIP for 1 more year to support the FII sale? That's a very important question to ask. And even assuming that all these stories have a economic impact, are they already priced into the market? That is another question which is very difficult for us to be able to answer, right? So global fund managers are now not very optimistic. They are still pessimistic. Right from say March 2020, February 2020, they were pessimistic. Maybe they were hoping that the war will be over soon. That's not happening, right? So inflation is high. There is uncertainty in the equity market. So instead of a V-shaped recovery, it could be a K-shaped recovery, where some of them recovering, some companies not recovering. All these things are going to happen. You have to sit and watch and not give up. Instead, remember that if your goals need high returns from stocks in the long run, this could be the time for you to be buying and sitting tight. That's not easy. The volatility will cut both ways, right? So the fall will also be there, the rise will also be there. If you miss the fall, just stay there, because by selling you could miss the rise, right? So you saw the index going from here to here. Don't sell at that price. Don't do panic selling. That is the time when perhaps you should be buying. Even if you don't buy, if the recovery is like this, you will recover your prices very quickly, right? So remember that. So volatility will hurt you, but if you are willing to sit tight, then volatility will neither hurt you nor help you, right? So keeping your money in the savings bank account is not a bad idea, provided you know when to come back. So we unfortunately think we can do market timing, which we can't. The more literature you read, the more you will be convinced. But some part of your money you may be doing some kind of a day trading or things like that. Be careful. I don't think I have anything much more to say. Thank you.